Hello, Cliff Stanwick, Stanwick Real Estate, and today I'm doing a real estate market update for South Placer County. Thank you for joining me, and it's been 2 weeks since I've done this, and adding a couple new data points. I think it's interesting to look at the market for what it is. It's basically a bifurcated market, and we're just going to kind of go over the disclaimer really quick because it's something I like to cover off on. The views, thoughts, and opinions expressed are the speaker's own and do not represent the views, thoughts, and opinions of Real Estate Fixed Inc., who the speaker is employed by. The material and information presented here is for general information purposes only. So there's been a lot of talk about what's exactly going on in the real estate market, and I think it's important to keep everything in perspective. The rates have gone up significantly for real estate, and the prices may be down. The average or the median, depending on how you look at it. Most of the time, we're talking about averages, which are based on all the homes that are sold, and then we have the discussion of median, which is half the prices are higher and half the prices are lower. So even though it may seem like an average, it isn't. And it's very important to understand what the difference is between a median price and an average price, because when you go out to Zillow and you look at their home sales reports for an area, it'll talk about averages. And when you look at a lot of information out there, the median is something you probably should really look at, because in a market where sellers are going out with the wrong price, they are not selling below the median time. They're the people that are pushing the median time up. And when you look at the average prices, that really tells you the trend of whether the prices are increasing or decreasing. If they're above the median, that means that prices are increasing. If the prices are below the median, that means prices are going down. Or it can also mean that most of the activity is in the lower end of the market or the upper end of the market, right? So one of the things I wanted to go over is, some of the data that I do, right? So this is the data. And in general, when the rate spiked up, we saw all the listings, the active listings, the new listings, and this is all for single family homes that are on the market. We saw the inventory decrease. Correspondingly, obviously, there was the pendings have pretty much continued on their normal rate. One of the things that that I added here is I wanted people to look or to have a new reference here, and that is, I've been talking about properties that have been pending in basically 20 days, that they go out on market and now they're in contract in 20 days. And so I added two new columns here because I think it's kind of interesting. So there's 170, let's start with Roseville. There's 171 actives, and 74 of them are homes that have been on the market for less than 20 days. Okay. Now, in total, there's 195 pendings. That means basically that the inventory is 26.31%. Okay, and 26.31 days. I'm sorry. So basically, we have less than a month of inventory, and this is just single-family homes now. It's not condos. It's not two-family homes. It's a one house on one lot. And the interesting part is when you look at the pending in less than 20, days, the number of homes that are actually pending in less than 20 days is almost 50%. So the house goes out in less than 20 days, it's in contract. Now, when I look at the listing inventory to the pending inventory that is on the market less than 20 days, essentially homes are essentially as soon as they're listing, most of them are getting into contract. Roseville has 130%, Rocklin has 134%, Lincoln has 144%, Granite Bay has 142%, and Loomis has 50%. And that's only because there's no houses in Loomis. Okay, there's 8 listings that went out in less than 20 days, and half of them are in contract in 20 days, but there's 11 pendings and there's 27 listings. So, Loomis is the tale of two markets. One of them is, under 700,000, and the other one is, over 1.5 million. So there's not a lot of houses in the middle, and there's not a lot of houses being listed. Loomis as a market is probably, less than 5% of what Roseville is, right? But the interesting thing also in this data that I wanted to go over was the fact that we're not seeing any increase in short sales, okay? We're not seeing REO showing up. We're really not seeing anything going on here. And the other thing I want to show you is talking about the data. Are prices softer than last year? Relatively, yes, they're down somewhat. If you go out and you look at the Zillow average numbers in Roseville, the Zillow average, if you click the link, which is on my spreadsheet, it's 617,000, but the average house in Roseville is 652,000, and the median house is 635. So both those numbers are above the Zillow average. So again, the point of this is that the Zillow data is usually fairly old, all right, and it isn't as updated as this data. This is data that is the last 30 days. Most of the time when you go out to Zillow, if I just click on one of these, right, if I click on Roseville, it says that it's 617.7, right? If I click on Rocklin, it says it's loading 655. If we look at the data here, right, we're well above that, right? Now, the interesting thing, just talking about the data here, is that the average prices in Lincoln are much higher than the 622. It's literally $105,000 more, but the median is 613, which is less than the Zillow average, but that means half the houses are selling at 613. So it's essentially the lower end of the market is moving a lot faster. Granite Bay, it's pretty much flat, but the houses are like 300 and over $370,000 more than what the Zillow average is, right? And essentially the sold and the median are essentially the same. And again, these numbers will fluctuate because of the volume. Now in Loomis, there's no sales, so, or REOs or short sales, so the average is roughly $53,000 higher than Zillow, but the median is a lot lower because the houses that are really selling in Loomis are the older homes in the few older subdivisions that are in Loomis, right? So this is part of what I'm trying to share with you today is don't get wrapped up in the national news or the California real estate news for homes, right? Right now, the report came out that new home sales, new construction sales are up, right? And prices are up for new construction sales. The point I want to make about new construction sales is they are essentially holding on to their pricing, but they're incentivizing the purchase of the homes. They're offering incentives. They're paying agents to bring buyers, pretty much full commission plus, for us to bring a potential buyer to their new home development. They are buying down loan rates. They are doing everything to get homes sold, and they are maintaining their prices. And I am going to do a YouTube video on new home pricing and some of the techniques they do. I really think that sellers need to realize that the market has changed and that they're going to have to do more to sell like the new home builders do. You're going to have to pay perhaps a premium for commission, as horrible as that sounds. You're going to have to figure out a strategy for helping get these loan rates down, because for every point the rate goes up, you lose 10% of the buying power. So if you're willing to pay for 1 point of the loan and it's essentially a $5,000 or $10,000 cost, but it preserves $25,000 of equity. Why wouldn't you do that, right? But again, a lot of these conversations are not going over well. And it gets back to the whole point of my YouTube channel, which is, deconstructing the value of a real estate agent. You know, you need to find somebody who is going to sell your house when you decide to sell for the most money in that market. And it isn't what it was last summer, but also what they're going to do that is going to make that house sell quickly. If right now, as I showed you in this data, most of these houses, over half these houses, and almost every house that's going out currently that is right priced, is selling in less than 20 days. One of the things that I need to cover off on is the inventory that's going out. The inventory that is being sold in this market is not a wishful sale market. These houses have, or these owners have, a very compelling reason to sell. They're not just hoping that they get, $50,000 more than what the house was worth last summer. They've adjusted their prices, they've made their house ready, and they're going to negotiate and sell the house. That's what they're doing. So that's what the data is showing. The data is showing the new listings are selling. The old listings last year, they're sitting. And again, I can't tell you that enough, that houses are selling in this market. Yes, they're not selling for as much as they did last summer, but they're not exactly going down 10, 20, 30% that they were up over the last 2 years. So that is basically the summary of this week's market update. If there's, I would really appreciate it if you would subscribe and get notified on my YouTube channel. If you would follow me on Facebook, I usually like to do some extra information on real estate on Facebook. And you can always reach out to me and contact me on stanwickre.com. Again, I want to thank you for your time. I think this is a market that is a little bit softer, but the houses are selling, and you have to just be on your game and understand the market value, and you will be successful selling, and you will be successful buying. Thank you, and I really appreciate your time today. Have a great day.